Hello, crypto traders. How are y'all doing today? Today's lesson that we are going to be going over is fundamental traits of a trader. So, what we're going to be talking about is the 5 basic fundamental emotional traits that you need to implement to be a successful trader. So, let's go ahead and get started. So, first trait is passion. Passion is very important, and without it, it is tough for traders to become profitable. When you have passion when you're a gambler, it can affect you negatively. The market is unforgiving, and even the best traders lose money. So when you come into trading without the fundamentals and you lose big time, it can affect your passion, right? Having passion once you have a proper foundation and implement fundamental trader tactics can lead you down the path of a successful, profitable trader. This is by far one of the most important traits because without passion, you will find that the seriousness level just isn't there that is required to be successful. So, if you find yourself not passionate, I would say work on ways to being passionate about trading again. Because a lot of times then it's not work. And, you know, I always recommend if you can be passionate about the art of trading and learning the art of trading rather than making money and being passionate about making money, that the money will come along is if you are passionate about the right things, right? So that's the first trait. The second trait is discipline. So discipline is important before, during, and after. You must have discipline on each stage. Some things that you want to be disciplined in is like having an invalidation stop loss with your defined risk. We know that the definition of a stop loss is the point at which your trade is invalidated, right? Whatever your plan is, you must follow through with the trade for discipline. So don't go away from your initial plan, right? Stick to it, and even if after the fact with review, wasn't necessarily the right decision. The point is you're confident that you can follow through with a plan that you set up. If you get stopped out, you get stopped out in the before stage, right? So this, that's just like at talking about hitting a stop loss at the beginning of a trade. The reason why I'm putting this is because it's important to take stop losses. If you have a trade idea and you have an invalidation stop loss and it gets tagged, then just take it. Because if you go against your initial plan once, it makes it easier to go against it again and again, and then you'll have a snowballing effect where you're now kind of just being hopeful. And in the market, you don't want to be hopeful about a direction of a trade. You want to be, in a place where you're protecting your money, right? Um, if you're ever hoping for a direction or a turnaround, you know that you are in underwater or something, and that's not where you want to be. Discipline is focusing on protecting your money, not making money. I just said that. It's a reiteration of that, right? Protecting your money. Well, if you can learn how to do this, then you can then learn how to make money. This is step one. So it's more important to do this first. During the trade, starting to make small adjustments to managing of the trade, such as moving your stop loss and profit, right? So be disciplined about one, taking your TPs that you've defined for the trade that you're taking, and then also then moving your stop loss in profit to the next invalidation of the trade, right? Because as new information comes, there's invalidation for, like, if you were to take a trade at a live point, right? So it's like, okay, if I'm going to take a trade at a live point and I want it to go, there's no reason not to take an aggressive stop loss and profit, right? So always move your stop losses. Um, you know, make sure that you are following through with your plan, like we talked about, and take your TPs, and you can always adjust your plans, but make sure you're following the plans that you do. And by doing this, like for instance, if you do that, like let's say your targets are 2%, and you're predicting a 2% trade move, and you take your TPs at 0.7, 1.1, 1.5, and 2. After that, let's say you have 30% left of your initial trade still in the market. You can let that go to like a moonbag status and then just move your stop loss and profit. And at minimalistically put your stop loss and profit at the 2% point. After price has moved away from it, right? You don't want to just put your stop loss and profit there instantaneously, after it's shown a breakout into like the moon back territories, which you could say. After the trade, having no emotional response to wins or losses. So this is when you look at your emotions, you have like upper and lower control limits. You want to try to stay within it. The areas where you can find danger is when you have euphoria or when you have depression, right? So you want to try to keep yourself from doing that. So if you ever find that you're euphoric, the best thing you can do is just take your win for the day and just come back another day to trade. You don't need to continue trading. That's not, that's not discipline, right? So you have to be very self-aware and self-conscious of, what emotional response that you're feeling. If you feel like depression or like, oh man, I messed up, and you're unhappy with yourself or something like that, it's better to just take it off, reset, be mentally clear, and be willing to live in the moment and be, emotionally stable rather than continue to trade, right? Also, just being accepting if you lose or win. No shoulda, woulda, coulda, but if I followed it, I followed the plan. Either it played out profitable or hit the stop loss with a defined risk. Simple as that. If you keep out the aspect of emotion in trading, it can help you become more consistent and then in your discipline, right? So that leads us to the next one. So consistency. So before we talk about consistency, let's go back. So we have passion. This is the first trait. The second trait is discipline. And then third is consistency. So with consistency, before we get into this, you consistently having the confidence and discipline to make trades with the goal of being net profitable, right? So you want to be consistent in your discipline, and you want to be consistent in your passion. So consistency is very important with trading. Following through with your trading plans, following through with your trading style, figuring out what works for you, what doesn't work for you, cutting those bad habits out, reiterating good ones. Yeah, so you want to be being consistent is one of the most important things because you will learn the ins and outs of your style of trading and your plans. Being consistent is important to being a long-term profitable trader and not a one-hit homer, right? So, there's traders that, hit big sometimes, but because they don't actually respect the art of trading and they don't really know what they're doing fundamentally, a lot of times they're not long-term profitable, right? They just give their money back to the market and, they just basically hit one big trade. So you want to stay away. Now, hitting big trades is fantastic and it's awesome. And I'm not saying you don't want to hit big trades. I'm just saying to be long term, you want to have a consistent trading style or trading plan, whether it be for your day trading, your intraday trading, your medium time frame, and then your, long time frame, intra weekly, monthly, right? Focusing on one style of trading so that you know the ins and outs and you have a lot of experience on. So, for instance, if you like to, let's say you don't really like trading unless there's like breakouts, right? So, if that's something that you really like to do, I wouldn't recommend doing that in the aspect of because you want to be able to trade any day and take opportunities any day. But what I mean by one style is like with your trading plan, right? So let's say you want to work on scaling in. So I have 4 scale-in points, 4 scale-out points. Certain setups that you like. Based off of price action. Hopefully, maybe some good confirmations off of indicators. After you have a price action setup for your trading idea. But when you can focus on one style and you can be consistent and disciplined on that one style, what that does is it helps you be more efficient and higher quality in that style so that when you try to learn other styles, you already have that discipline and that consistency to follow through that so that when you go to that new style, you won't make a fundamental mistake, such as not using a stop loss, not taking TPs, you know, and being able to understand your emotions during a trade because you have one style where it's making the variables more simplistic, right? When you start to trade many different styles of trading plans and setups, confusion can enter and it can cause issues, right? On your specific style, there's a way that you do it, right? And there's ways that you've learned because you took a similar trade setup multiple times, whether that be 1% of your account or whatever your exposure is. Point is it's very important to have your style, and learning that, because that will be the path to success for you on your trading journey. So be consistent. So we got passion, we got consistency, and we got discipline. Those are the first three traits. So the fourth trait is patience. So this one's very important as well. Patience is waiting for proper entries, waiting for your profit targets to get hit. So patience in trading is so important. Being calm, cool, collective, living in the moment, letting the price just, letting the market show you what is going on. Sometimes you're going to see these entry points and you're like, oh my gosh, I think I know exactly where it's going. This is what I need to take this entry, right? I would recommend trying to practice patience and maybe look for a confirmation of a trade idea, like a confirmation of the direction. And yeah, so patience is super important. When you have patience, consistency, discipline, and passion, and you implement all of those, that eventually leads you into a confidence in trading. So, patience is really important. You want to, this is just some tips on it. You want to keep the mindset that protection of your money is more important than making money, right? So with patience, we can implement that. We can understand, okay, maybe I don't need to take this trade. I don't really like the probability, you know, I don't need to do this, right? You can be patient. Don't give your money back to the market. The learning process to learn how to trade takes time, and be patient with the process, right? The average trader takes 3 years before they're consistently profitable. And the biggest reason why that is 3 years is because the lack of implementation of fundamentals. So, if you want to decrease that time for yourself, if you are a new trader, focus on just the basic fundamentals. And if you know that you're not implementing one of those, make it your goal just to focus on that issue. So you want the best way you can do it is don't overcomplicate it. Just focus on the issues that you're having, cut them out, reiterate good things that you know that are good, and that is how you will become a profitable trader. Stay motivated as well. Until you have traded profitably for 1 to 2 years, you can't call yourself a profitable trader in the big scheme of things. I think this is a very humbling statement, and when it comes with patience, is you want to understand that you need to earn that, right? Like you're not just going to get that. Like not there's a reason why only 10% of the market is profitable consistently. It's because it's an earned thing. It took time. It took patience to get to that level. It took a lot of learning experiences. It took years. So, even if, like, let's say it takes you longer than the average of 3 years, right, to start to becoming consistently profitable, it's just about the process. You're always going to improve. What I always like to say is the way that you read the chart is like reading level, right? Like you might be at a seventh grade reading level 2 years ago. Now, today, you're at like a 10th grade reading level. And how you can read the chart, seeing things. It's more simplistic. Like you can see things that you didn't necessarily see back then, right? Or maybe your technical analysis was completely different. So understanding that the goal of the ideal version of the trader you will be in the future and constantly improving. So the ideal version of the trader you want to be is you want to be patient, you want to be consistent, you want to be disciplined, and you want to have passion, right? So when you incorporate all of these, you're passionate, you have discipline, you have consistency in your discipline and passion, and you are consistently patient as well, right? And being consistent with your patience, being disciplined with your patience, then that is where you get confidence as a trader. And what confidence is the push to take a trade, right? In trading. Being consistent is important for confidence because you have a system that you follow and has a track record to follow. If you have a system and it has a track record, now you have something to back yourself up to, say that this is who I am as a trader, right? I have a record. I can show you this record. And even if your P&L record or your trading journal record or looking through your trades that you took is, let's say, negative or even net nothing, and it's just even, the point is you can go back to that, right? And you can look, okay, so when I did this system, I've been more profitable. When I did this system, I wasn't as profitable. Okay, so with this system, I want to keep implementing this, but with this system, let me figure out what issues I'm doing and cut those issues out, and maybe implement some things that I didn't implement in that system before, right? Um, so by reducing your risk with multiple entries, it can help with confidence, because sometimes that push to take the trade, like when you're looking for an opportunity, you can be like, oh, I don't want to go, all in. So what that means, and I'm not saying all in. What I mean is I don't want to put this money, man. It's too much money. So what that means is if you're scared, if you have any fear, doubt, or worry about it, that means you're using too much money. So what you can do is instead of putting $1,000 in a trade or $100, whatever your trading capital is, break that down, right? So do 4 entries and break it down to the 20, 20, 40, 20, where we do 200 in one entry, 200 in another entry, 400 closer to where our invalidation stop loss is, and then 20. So what that does is it brings your average higher, and it gets you closer to that invalidation stop loss, and it can help with confidence, because what happens is, let's say only 2 entries get tagged. Now, yeah, you didn't get all the money in that you potentially might have got if it went up, but now you are knowing that it gives you more room to be right, essentially, right? Because you don't want to just put the line in the sand and be like, this is where it's going to go from this point. So by using multiple entries, 2% scale in entry ranges, and things of that magnitude, it can help with your with your trading, right? And it can help you with your confidence to take the trade. If you ever lack confidence, it's due to an improper trading plan and following of it. So, if, like I said, if your improper trading plan, that incorporates exposure. So if you're using way too much money and you're lacking confidence, because then decrease the money, right? Um, if you have a trading plan where it's like, this is where my stop loss is, if you follow through with that, then when you took that trade, you are already comfortable with the potential situation of that loss occurring. Like, you are completely accepting of that. So you need to be accepting of, and understanding of your trading plan. So when you have a proper trading plan, it helps with confidence. And then, just being disciplined and following of it. When you make mistakes over and over again, this can affect your confidence, because if you're being real with yourself, you know that I am consistently making the same mistake, and I've said I'm not going to do it, and I'm still doing it. So then what I would recommend is for that next month or whatever, focus on cutting that specific mistake out. That's your only goal. Cut that mistake out. Don't ever let that mistake happen again. And even if you do in the future, be confident in the progress that you've made and cutting it out, you know? But be very careful about this, commonality mistakes, because if you don't cut this out, eventually it's just going to be detrimental to you as a trader. Being confident in trades, whether they go your way or not, being confident in yourself and your trading setups will give you that push to enter the trades and put some risk on the line. So being confident, whether it hits your stop loss or it goes your way, being confident in yourself, and your discipline, your consistency, your trading plans, it'll give you that push to enter trades, the push to take the trade and put some risk on the line. So when we look at like the pyramid of importance, still what's more important is your, finding the entries and how you do your trading plan setups, essentially, for the entry, risk acceptance, accepting a loss potential, right? And how you manage your money exposure. This is still the most fundamental level 1 basic thing that's the most important. It's foundation. And then secondarily, this is where a lot of this emotional aspect implements that we talked about today. So a trading plan and management of the trade, this can be where you might need to work on your emotions, right? Feeling fear, doubt, worry. So work on that discipline, that consistency, that passion, and then you'll build that confidence. And then, the final thing is hedging. This is a more of a experience thing, but I put it here because it's important to hedge, right? Because you want to play both directions. So if, let's say, the market is trending down, your main trades would be in shorts. But whenever there's, nice little low time frame reversals, you can take some long hedging to still make profit, right? So basically what I'm saying is trading both directions. You always want to trade both directions in the market. If you don't, you're going to miss out on opportunities. That being said, you do want to identify the trend and trade with probability, right? But always look for setups in both directions. Tips and tricks: emotionless, no bias, and using systems that are based off logic and mathematics systems rather than emotional feelings, right? Practice makes experience. Transitioning from a losing trader to a profitable trader is consistency. So you gotta get this experience under your belt. The words bullish, bearish can implement emotional responses and biases. Use the words uptrend, downtrend. These terms are more focused on logical price action data points such as supports, resistance, and validation points or points of achievement, right? So, focusing on uptrend and downtrend can be better because if you say bullish, that just means, oh, we're going up. Whereas an uptrend, we're going up, also coming down and testing supports, right? And coming up, and the same thing with the downtrend. Always cut your losses quickly and let your winners run. Do not let a winning trade turn to a losing trade. So if your losses are not going your way, it's almost always better to just cut them quickly, right? If the trade isn't going your way, it's not going to the trading plan that you initially had with new information, you can cut it quickly even before your stop loss if you want, but definitely cut it at your stop loss. And then, never let a trade that's winning turn into a losing trade, but let your winners run, right? So take out, 50 to 75%, maybe even 80% with your TPs, but leave a little portion for moon bags. There's no reason if the trade's going your way to cut that out. So yeah, that is the lesson for today on fundamental traits of a trader. If you liked it, please put a like on the video. And any comments, if you have any things to add or any questions, please do that, and hit the subscribe channel. And if you are new and you're not from Crypto Traders, you can see the link and the info for our Discord where we do live analysis and setups and education. So thanks for attending, guys, and I hope this helps you out on your trading journey.